Hey everyone, another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne. We're going to be talking about the breakout in gold, also how he's viewing silver, what he thinks about the precious metal stocks, and also that relationship between gold breaking out and markets breaking out. Jordan is the founder and editor of the Daily Gold. I'll post a link below this interview to his website. Jordan, first and foremost, gold on the futures market right around 2150. It got moving on Friday of last week and has just kept on going. Finally, we hit all-time highs and extended on those all-time highs. You recently sent out an article to your subscribers talking about cup and handle formations and the break above those, just how bullish that can be. Break down what you're seeing in the gold chart here, Jordan.
Hey, Corey, just looking at gold in a vacuum, I mean, this is a absolutely beautifully bullish chart. I mean, just a textbook, super bullish cup and handle going back 13 years. It's finally broken out, and I just can't get over just how perfect this technical setup looks. I should say you should be careful by always going with looks, but that aside, I mean, this is legitimately a really, really bullish looking chart and setup here. And so you have this big cup and handle that the gold's breaking out from. The measured upside target, I think it's somewhere from in the 2900 area to as high as I think 3080, depending on how you measure it. But within the handle, the 3.5-year handle that began when the market peaked in August 2020, there's two cup and handles within that. There's one, if you go back about 2 years, there's a cup there, then a handle that went on for, I think, about a year. And so that projects to 2,500. And you can also look at the handle consolidation. You can also pull a inverse head and shoulders continuation pattern out of that. So that also projects to 2,500. But inside of that cup and handle, the handle portion over the last year, that's also its own mini cup and handle, and that projects to 2350. So I think that regardless of what other markets do, I would think that gold is at least going to get to 2500 on this move. And I haven't posted a video yet, but I do have an analog chart, a breakout analog chart highlighting the 6 historical breakouts in gold on the current scale. And it leads me to think, I mean, it gives you strong evidence that gold can get to 3,000 like in the next 8 or 9 months. It has performed really close to that in 5 of those 6 breakouts. So it's a really, really bullish setup for gold and precious metals as well. I think, if not immediately, eventually we'll see money come into silver and the gold stocks. But yeah, just focusing on this year, I mean, this is a really bullish setup. And so the wind is going to be at the back now of the sector and all these companies, finally.
Yeah, Jordan, it's sure nice to finally have a call like this where we finally have the confirmation. And I loved how you broke that down for your subscribers, that there was cup and handles abounding. As you mentioned, there was several cup and handle patterns within the cup and handle pattern that's the larger pattern. You also mentioned on the log scale, it could actually break up to 4,000 as another target. But you made a point in this recent article to subscribers where you said, at the worst, this is the most significant breakout since 2005, after which gold surged 360% in the next 6 years. And at the best, it's the most significant breakout since 1971 when the U.S. took gold off the gold standard. So could you unpack that point about how you're looking at, I guess, worst case scenario and best case scenario from the historical analogs?
Yeah, I think the worst case is maybe you get a move to 2,500 or maybe even 2,700 and you get a full snapback back to 2150 or so. You get a hard retest, and you had that after the breakout in 1978 and also the breakout in late 2002. Like in late 2002, you had this breakout and this really sharp move up right away, but then it came back and retested it. So in 2 of the 6 previous breakouts, you did get a hard snapback, although the market, I mean, after 78, the market went crazy after that. So yeah, I don't know if that's necessarily negative, but I think the worst case scenario, and I mean, we're talking realistically because this is a super bullish breakout. So the worst case scenario, gold's going to crash and, blah, blah, blah. I mean, that's not realistic. So we have to think in the context of you have this super bullish breakout. So the worst case, or like just call it the least best scenario, is you get some move to 2,500, maybe even 2,700. I think there might be a Fibonacci level around there, and maybe gold corrects back to 2,150 or so, and then it kind of fizzles out, and maybe it takes a little time. I mean, it's still bullish, but there can be a scenario where that happens, where you get a really good move for, I don't know, 3, 4, 5, 6 months, but then you get a pullback and then consolidation. And so I think that type of deal is probably the realistic worst case scenario versus, I mean, a typical scenario. Even if you get a quick retest, the market will really fly after that. But just like the median scenario, you could say, is it probably moves up to 3,000 before you get any significant correction. And thinking about the comparison to 2005, if you go back to gold in the 1982 and 1987, after those rallies, they rallied somewhere into the mid to upper 400s. And so you can draw a horizontal line there, or you can draw a line that's trending down, also connecting to the 96 high. But so when you had this breakout in 2005, it was really like a 20-year breakout where gold had gotten above 500 for the first time, I think, since 1981. So that was a really significant multi-decade breakout. But however, it wasn't a breakout where that was a consolidation from the all-time highs. From the all-time highs, that would have been, gold's breaking above 850 or 880 or wherever it was. So the most explosive breakouts are when you are, consolidating from an all-time high, and then you get a real huge breakout after that, like you had in 1978, 79. Also, I would say, I mean, it's not perfect in 2007 to 2009, but that scenario of breaking above 700, I mean, the GFC, you did have a retest of 700, then it went to, it almost tripled in the next 2.5 years or so. But this is just much cleaner than both of those, because again, I mean, you're breaking out from all-time high resistance that essentially goes back 13 years to 2011. And this handle, as I mentioned in past interviews, I mean, yes, the handle wasn't consolidating perfectly, around the 11 high. The handle developed, so the right side, the rim of the cup, this handle was consolidating, above the beginning of the pattern, the 1900, 1920 peak in 2011. So that shows you it's even a more bullish than typically average pattern, and then you have the 13 years, just all of that. It just leads me to think that this is the most bullish breakout since the early 70s. And granted, it will take some time. You're not going to know that for certain in the next 3 or 6 or 9 months. I mean, it's going to take a couple, 2, 3, maybe even 5 years before people really figure it out that, oh, that's, this is pretty significant. That was pretty significant. It also depends on the 60-40 portfolio in the stock market. I mean, how soon gold can really start outperforming those, because when that happens, then you're really going to be in new secular territory. And then, gold can really move, much higher, considerably so.
Oh, something we've talked about, the outperformance of gold over the market. Still waiting for that to happen in a way, but let's also talk about silver then. Very bullish outlook for gold. What about silver, though? Because that has lagged gold, and we know how much silver relates to the underlying gold stocks.
Yes, silver, I mean, master of the obvious here, but silver is very, very important because I look at it as a confirming indicator for precious metals. I mean, not necessarily gold, but it's a good confirmation indicator for the sector. I mean, gold has been building this handle, and silver has just been really messy. Its consolidation it's okay. It's not bearish, but it hasn't been a typical bullish consolidation, in my opinion. But circling back to the breakouts, so I'm looking at these 6 breakouts in gold since 1978. I'm looking at a chart right now where I'm looking at the silver breakouts. So these breakouts in gold, gold generally makes a really big move over 6, 9, 10 months or so. And silver basically, it performs well in all those 6. But if you really drill down into it, half the time silver takes off with gold right away, and it's almost immediately starts outperforming gold. But the other half, silver doesn't necessarily outperform right away. Like I'm looking at the late 2002 breakout in gold. Silver consolidates for, I don't know, 6 months or so before then it really starts to move up considerably. Another example, if you go back to the breakout in, I think, September, October 2009, you look at gold, that was when it broke out above, I think it was 1,000. Silver shot up quickly, but then when it got to its resistance, it consolidated for 6 months or so, or maybe even 8 months before it finally took out 20 and 22. So given the outlook for gold, that it's really good, probably for the balance of this year, that will be good for silver. That's going to pull silver higher. But does that mean silver is going to immediately outperform in the next month or two? Not necessarily. There's some historical precedent where silver can lag, and it can, it can take 6 months for it to really start outperforming gold. And so looking at the silver chart, I would say maybe when it gets to 26 or 28, I mean, if it gets to those levels quickly, then from there it could consolidate for a number of months, depending on how strong the gold move is. So I don't want to get into the weeds too much, but essentially silver is a confirming indicator, and we don't know yet if it's going to outperform gold right away. I would lean towards, I think it's going to take silver some time before it really gets going and really outperforms gold.
Well, Jordan, is par for the course. And when silver finally does get going, it usually does have a big catch-up move, and that drags the mining stocks up with it. So obviously, if gold is breaking out to new highs and continuing to press its bets higher, and silver eventually plays catch-up, the mining stocks will as at the same time. But I want to get back to the intermarket analysis part of this that you mentioned at the onset, that you ultimately want to see gold and the precious metals complex outperforming the general equities market. And right now we have a strange environment where everything is going up together. To Corey's point, we've had the general markets breaking up to new highs. We've had cryptos breaking out to new highs. Gold is breaking out to new highs. And it seems like hardly anybody even notices it in the general markets because everything's blasting higher. Is that a good thing or a bad thing? Because we want to see that divergence.
Yeah, it's a really good question. I would say it's a good thing. I'm not, in the kind of short to medium term, I'm not really worried about the other markets, just because I think there's some historical precedent for this. I mean, the best case is the mid-60s, 1964, 1965, where gold stocks had this huge breakout. I mean, a 28-year, just beautiful breakout from a beautiful base. From that breakout, they really started outperforming the stock market. And the stock market itself, in real terms, it really only performed for the next couple years until 1966. So I think that's the best historical precedent. I mean, there's also, you can look at 2007 and 2005. Those are not quite as good of historical precedents, but they still apply. But in 2007, like you think, okay, well, gold had this breakout, this really quick move up, and then you had the peak and the global financial crisis. But looking at that scenario, gold had already been going up for 6 years, and it was leading. I mean, this is a different scenario where gold is coming out, gold and precious metals are coming out of a secular bear. So this is completely different. That's what makes it more like the 1960s. So I don't know if that answers the question. I mean, I'm also looking at my gold against my total 60-40 total return calculation. And gold has a lot of work to do there before it gives me a real signal that, okay, we're in a new secular bull. But the problem with that is, gold could be a lot higher before you actually get that signal. So, I mean, long story short, I'm not concerned about the other markets for gold. I think the fact that everything's going up and gold has broken out from this 13-year cup and handle pattern, and precious metals are finally going to start to move out of this secular bear that they've been in. To me, that's more concerning about the stock market and crypto, since crypto's been following the stock market. I'd be more concerned about those markets. I mean, again, the historical precedent of the mid-60s tells you maybe everything can rise together for the next year or so. I mean, that's possible. But bigger picture, I'm not I'm not that concerned, with everything that's going on in these markets for precious metals. I'd be more concerned about the stock market.
All right. Well, Jordan, not much more to say there. Yeah, we have seen gold and the stock markets moved all-time highs together a number of times over history. Look, we just need follow-through being gold investors in gold and, quite frankly, a follow-through in the underlying stocks. But you've outlined how to watch silver, general time frames we can look at. Right now, I know a lot of gold people are celebrating, and it's rightfully so because there has been some follow through. Now it's just continued follow through and seeing how long this run can go and balancing it out with everything else running as well, which again isn't necessarily a bad thing. There's wealth creation going on out there, which is positive for a wide range of markets. Jordan, thanks for your insights here. We'll follow up with you next week to see what some more of this follow through is because it's still really early days. We're about 4 days into this run, but at least it's an encouraging 4 days. To check out Jordan's website, click the link below. It's the Daily Gold, where he keeps you as up to date on the charts for gold, silver, number of other metals as well. Jordan, thank you very much for your time today. We'll chat next week.